Real estate has long been touted as a path to wealth. But the traditional route of buying and managing properties comes with a catch: being a landlord. For many, the idea of dealing with tenants, late-night calls about plumbing issues, and constant repairs is a nightmare. What if you could enjoy passive income, build long-term wealth, and watch your investment grow without lifting a finger? That's the promise of investing in multifamily real estate without being a landlord. Imagine this. You're relaxing on a beach, sipping a cool drink while your money works hard for you. No frantic calls from tenants, no emergency repairs, no more chasing down rent checks. Traditional real estate investing often feels like trading one job for another. You're constantly on call, dealing with tenant issues, managing repairs, and navigating property management complexities. But there's a better way. A way to invest in multifamily real estate without sacrificing your precious time and peace of mind. Investing in multifamily real estate without being a landlord allows you to tap into a powerful wealth-building strategy while maintaining your freedom and flexibility. It's about partnering with experienced professionals who handle the day-to-day operations, allowing you to sit back, relax, and watch your investment flourish. This strategy is particularly appealing to busy professionals, high-income earners, and retirees who want to grow their wealth without adding another job to their plate. The life of a busy professional is often a balancing act, juggling demanding careers, family obligations, and personal aspirations. Finding time to research, analyze, and manage investments can feel impossible. Investing in multifamily real estate without being a landlord allows you to leverage your hard-earned capital to generate a steady stream of passive income without derailing your already hectic schedule. It's about building long-term wealth on your terms, without adding another layer of stress to your already full plate. For high-income earners, preserving and growing wealth is just as crucial as generating it. Traditional investment avenues often fall short, failing to offer the tax advantages and stable returns that sophisticated investors seek. Multifamily real estate syndication presents a compelling solution. By pooling resources with like-minded individuals, you can access larger, institutional-grade properties that offer significant cash flow and appreciation potential. Retirement should be a time to relish the rewards of a life's work, not worry about finances. Multifamily real estate syndication offers retirees a stable, income-generating asset class that can provide peace of mind and financial security. The consistent cash flow from rental income acts as a reliable supplement to pensions or retirement savings. It's about enjoying your golden years on your terms, knowing that your investments are working just as hard as you did for decades. The allure of becoming a landlord is often strong. Visions of steady rental income and long-term property appreciation dance in aspiring investors' heads. But the reality of owning and managing rental properties can quickly turn those dreams into nightmares. Tenant issues are a constant source of worry. From late rent payments and noise complaints to property damage and evictions, dealing with tenants can be a full-time job. The truth is, being a landlord is not as simple as collecting rent checks. It's a hands-on business that demands time, energy, and a high tolerance for stress. Many new investors are drawn to the idea of managing their own properties. They believe it gives them more control over their investments, allowing them to maximize profits by cutting out the middleman. While this hands-on approach might seem appealing initially, it often leads to a rude awakening, exposing them to a myriad of challenges they're ill-equipped to handle. Property management is a specialized field, requiring expertise in tenant screening, lease agreements, legal compliance, maintenance coordination, and accounting. The illusion of control often comes at the cost of freedom, flexibility, and peace of mind. Beyond the obvious expenses like mortgage payments, property taxes, and insurance, traditional real estate investing is riddled with hidden costs and unexpected headaches that can quickly erode your profits. Vacancy rates, for instance, can significantly impact your cash flow. Every month a unit sits empty translates to lost rental income, eating into your profits. Moreover, unexpected repairs, natural disasters, or unforeseen legal issues can lead to substantial unplanned expenses, throwing your investment returns into disarray. Managing tenants can come with its own set of financial risks. The true price of traditional real estate investing often extends beyond the initial purchase price, encompassing a myriad of hidden costs and potential financial pitfalls. In the world of real estate, bigger often means better. Larger apartment complexes with their multiple units and economies of scale have the potential to generate significantly higher returns than single-family homes or small multi-unit properties. Real estate syndication offers a way for investors to pool their resources together, combining their individual capital into a larger investment pool capable of acquiring those bigger, more lucrative properties. This collaborative approach unlocks opportunities that would otherwise be out of reach for solo investors. It allows you to access institutional-grade properties and tap into the expertise of seasoned professionals who understand the intricacies of the multifamily market. The concept of real estate syndication might seem complex at first glance, but it's actually a straightforward and elegant solution for investors seeking passive income and long-term wealth creation. In essence, it's a partnership between two key players: limited partners and general partners. Limited partners, or passive investors, are individuals who contribute capital to the syndication deal. General partners are the experienced operators who handle all aspects of the investment, from acquiring and financing the property to managing tenants and overseeing renovations. Limited partners provide the fuel, which is the capital, and general partners act as the engine, driving the investment forward. This division of labor allows limited partners to enjoy passive income without lifting a finger, while general partners leverage their expertise to maximize returns for all parties involved. In a real estate syndication, the roles of limited partners and general partners are clearly defined, ensuring transparency and alignment of interests. Limited partners, as passive investors, enjoy a hands-off approach, while general partners take on the active management responsibilities. As a limited partner, your primary role is to review potential investment opportunities presented by the general partners, conduct your due diligence, and decide whether to invest. Once you invest, your capital is pooled with other limited partners to acquire the chosen property. You then sit back and reap the rewards of ownership, receiving regular cash flow distributions and sharing in the profits when the property is sold. General partners are responsible for sourcing deals, securing financing, overseeing renovations, managing tenants, and handling all aspects of the property's day-to-day operations. This symbiotic relationship ensures that everyone's interests are aligned. Real estate syndication offers a compelling alternative to the traditional model of owning and managing properties directly. It allows you to tap into the lucrative world of multifamily real estate without the headaches of being a landlord. With syndication, you can become a passive investor in large-scale apartment complexes, enjoying the benefits of ownership without the hassles of day-to-day management. It's about leveraging the power of collaboration, pooling resources with like-minded individuals, and entrusting experienced professionals to handle the complexities of the real estate market. If you're ready to break free from the limitations of traditional real estate investing and embark on a path to passive income and long-term wealth creation, real estate syndication might be the perfect solution for you. In the world of real estate investing, multifamily properties, particularly apartment buildings, stand out as a beacon of stability and scalability. Unlike single-family homes or commercial properties, which can be vulnerable to market fluctuations and economic downturns, multifamily assets offer a unique blend of resilience and growth potential. The stability stems from the simple fact that people always need a place to live. Whether the economy is booming or facing headwinds, the demand for housing remains relatively constant. This inherent need for shelter translates into a steady stream of rental income for multifamily property owners, providing a sense of security that's hard to match in other asset classes. But multifamily investing isn't just about stability, it's also about scalability. One of the most compelling reasons to invest in multifamily real estate is its resilience during economic downturns. While other asset classes like stocks or commercial real estate can experience wild swings in value during recessions, multifamily properties tend to hold their value remarkably well. This recession-resistant nature stems from the essential nature of housing. People might cut back on discretionary spending during tough times, but they still need a roof over their heads. This consistent demand for rental units provides a buffer against economic volatility, ensuring a steady stream of income even when other investments are struggling. Another key advantage of multifamily investing is the ability to leverage your investment capital, amplifying your potential returns. Unlike other asset classes, where leverage can be risky, real estate allows you to use debt strategically to increase your buying power and maximize profits. When you purchase a multifamily property, you can typically secure a mortgage for a significant portion of the purchase price, often up to 80%. This means you can control a large asset with a relatively small down payment, freeing up your capital for other investments or personal endeavors. This ability to leverage debt responsibly is one of the key drivers of wealth creation in the multifamily market. Building a legacy of wealth. The long-term advantages of multifamily investing. Multifamily real estate investing is not just about generating short-term profits. It's about building a legacy of wealth that can benefit you and your loved ones for generations to come. The long-term advantages of owning multifamily properties extend far beyond monthly cash flow, providing a solid foundation for lasting financial security. One of the most significant long-term benefits is appreciation. Over time, well-maintained multifamily properties tend to increase in value, especially in desirable locations with strong rental demand. This appreciation can significantly grow your net worth, providing a valuable asset that you can pass down to future generations. Moreover, multifamily investments offer tax advantages that can help you keep more of your hard-earned money. Depreciation deductions, mortgage interest deductions, and other tax benefits can significantly reduce your tax liability, freeing up more cash flow to reinvest in your portfolio or enjoy your desired lifestyle. Pooling resources, amplifying returns. The essence of syndication. At its core, real estate syndication is about harnessing the power of collaboration to achieve what individuals might not be able to accomplish alone. It's about bringing together a group of like-minded investors, each contributing their unique strengths and resources to collectively invest in larger, more lucrative multifamily properties. Think of it as a financial symphony orchestra. Each investor, like a skilled musician, brings their own instrument, their capital, to the ensemble. The general partners, acting as the conductors, orchestrate the investment process, ensuring that each instrument plays its part harmoniously, ultimately creating a beautiful symphony of financial success. This pooling of resources unlocks a world of opportunities that would otherwise be out of reach for solo investors. Suddenly, those seemingly unattainable institutional-grade apartment complexes with their promise of substantial cash flow and appreciation become accessible. It's about leveling the playing field, empowering individual investors to compete in the big leagues of real estate. The syndication cycle, from acquisition to distribution. The journey of a real estate syndication follows a well-defined cycle, starting with the identification and acquisition of a promising multifamily property and culminating in the distribution of profits to the investors. Understanding this cycle is crucial for investors to make informed decisions and feel confident in their investment. It all begins with the general partners meticulously scouring the market for undervalued or underperforming apartment complexes with significant upside potential. Once a suitable property is identified, they conduct thorough due diligence, analyzing market trends, evaluating the property's financial performance, and assessing potential risks. If the property meets the strict investment criteria, the general partners structure the syndication deal, outlining the investment terms, projected returns, and the distribution of profits. They then present the opportunity to potential limited partners, providing comprehensive information about the property, the market, and the investment strategy. Transparency and trust, the foundation of successful syndications. The success of any real estate syndication hinges on a foundation of transparency and trust between the general partners and the limited partners. Open communication, clear documentation, and a shared commitment to ethical business practices are paramount for fostering a strong and mutually beneficial relationship. General partners have a fiduciary responsibility to act in the best interests of their investors, putting the needs of the limited partners ahead of their own. This means being transparent about all aspects of the investment, including potential risks, fees, and the projected timeline for returns. Limited partners, on the other hand, should feel empowered to ask questions, review documentation thoroughly, and conduct their own due diligence before making an investment decision. A healthy syndication partnership is characterized by open dialogue, mutual respect, and a shared understanding of the investment goals and strategies. Unlocking passive income, your role as a limited partner. One of the most appealing aspects of real estate syndication for busy professionals, high-income earners, and retirees is the passive income potential it offers. As a limited partner, your role is primarily that of an investor, not a landlord. You're contributing capital, not time or sweat equity. Once you've invested in a syndication deal, the general partners handle the day-to-day responsibilities of owning and managing the property. They oversee tenant relations, property maintenance, rent collection, and all other aspects of the investment. Your primary responsibilities as a limited partner are to review investment opportunities presented by the general partners, conduct your due diligence, and decide whether to invest. Once you've made an investment, you can sit back, relax, and enjoy the benefits of ownership without the hassles of being a landlord. Here is a case study example. The Parkview Apartment syndication. Let's step away from the theoretical and dive into a real-world example of how multifamily syndication can generate impressive returns for passive investors. Imagine a 100-unit apartment complex called the Parkview Apartments, strategically located in a growing suburban area with strong rental demand. Our team of experienced general partners identifies the Parkview Apartments as an attractive investment opportunity. The property, while structurally sound, suffers from deferred maintenance and outdated finishes. This presents a classic value-add opportunity, a chance to increase the property's value and rental income through strategic renovations and upgrades. After conducting thorough due diligence, our team structures a syndication deal to acquire and reposition the Parkview Apartments. The total project cost, including the purchase price, renovation budget, and closing costs, is $5 million. We offer limited partners the opportunity to invest in the project, aiming to raise $4 million from passive investors, with the remaining $1 million coming from the general partner's capital. Breaking down the numbers, understanding the returns. To attract investors and ensure alignment of interests, we offer a clear and compelling return structure for the Parkview Apartments syndication. Limited partners receive a preferred return of 8% per year, paid out quarterly on their invested capital. This means that for every $100,000 invested, investors can expect to receive $8,000 per year in passive income, distributed in $2,000 installments every quarter. But the returns don't stop there. As general partners, we're also incentivized to maximize the property's profitability. After covering all operating expenses, debt service, and the preferred return to limited partners, any remaining profits are split between the general partners and limited partners according to a predetermined profit-sharing agreement. For the Parkview Apartments, we project an average annual return of 15 to 20% over the projected 5-year hold period. This includes the 8% preferred return, quarterly cash flow distributions, and profits from the eventual sale of the property. Your piece of the pie, the power of passive income. Now let's put yourself in the shoes of a limited partner in the Parkview Apartments syndication. You've invested $100,000, seeking a passive income stream and long-term wealth growth. Here's how your investment might play out. Every 3 months, you receive a $2,000 check in the mail, representing your share of the property's rental income. That's $8,000 per year in passive income, generated without you having to lift a finger. Over the 5-year hold period, the strategic renovations and strong rental market drive up the value of the Parkview Apartments. When the property is sold, generating a significant profit, you receive your initial investment back plus your share of the profits. As a real estate investor, you benefit from various tax deductions, including depreciation, mortgage interest, and operating expenses. These deductions can help you keep more of your hard-earned money, further enhancing the overall return on your investment. This real-world example illustrates the power of passive income through multifamily syndication. You've invested in a tangible asset, enjoyed consistent cash flow, benefited from tax advantages, and participated in the property's appreciation, all without the hassles of being a landlord. Your first step towards financial freedom: joining the investor network. The world of multifamily syndication might seem exclusive, reserved for a select few with insider connections. But the truth is, it's more accessible than you might think. The first step towards unlocking this lucrative investment strategy is simple. Join an investor network. Consider Surrey Capital Partners. Think of an investor network as your gateway to a curated selection of high-quality multifamily syndication deals. Surrey Capital Partners is your gateway. Our network is led by experienced general partners. We provide a platform for passive investors like you to access thoroughly vetted investment opportunities. There is a small membership fee for joining our investor network and comes with no obligation to invest. You can cancel your membership at any time. It's an opportunity to dip your toes into the water, learn about upcoming deals, and get a feel for the syndication process. You'll receive regular updates on new investment opportunities, along with insights into the multifamily market and the strategies employed by successful syndicators. Navigating the deal flow, evaluating opportunities, making informed decisions. Once you've become a part of Surrey Capital Partners, you'll start receiving a stream of potential investment opportunities, each with its unique characteristics, risk profile, and projected returns. It's essential to approach these opportunities with a discerning eye, conducting your due diligence and making informed investment decisions that align with your financial goals. Don't feel pressured to invest in every deal that comes your way. Remember, you're in the driver's seat. Take the time to carefully review the investment materials, including the property's financial performance, the market analysis, and the experience of the general partners. Ask questions, attend webinars, and don't hesitate to reach out to the general partners to discuss any concerns or clarifications. The Surrey Capital Syndication team welcomes your inquiries and encourages you to make informed decisions. Unlocking your financial future. The power of passive real estate investing. Investing in multifamily real estate through syndication offers a compelling path to building long-term wealth and achieving financial freedom. It's a strategy that aligns perfectly with the goals of busy professionals, high-income earners, and retirees seeking passive income streams and portfolio diversification. Imagine a life where your money works as hard as you do, generating consistent cash flow without demanding your constant attention. Imagine building a portfolio of income-producing assets that provide financial security for you and your loved ones for generations to come. This is the promise of passive real estate investing through syndication. It's about leveraging the expertise of seasoned professionals, pooling resources with like-minded investors, and unlocking the wealth-building potential of the multifamily market. It's time to break free from the limitations of traditional investing and embrace a smarter, more efficient way to achieve your financial goals. The path to financial freedom starts with a single step: the decision to explore the world of multifamily syndication and unlock the passive income potential it offers.